Is short-term rental a good tax strategy for you? The big, beautiful bill made 100% bonus depreciation permanent. STR loophole is again one of the hottest topic among high earners. What is a short-term rental? Is it true you can write off depreciation against your W-2 income to get a six-figure refund? What is the catch here? Welcome to Zoe Agency's podcast. My name is Justine Zoe. I am the CEO and the founder of Zoe Agency, a unique tax advisory firm that specializes in designing and implementing tax-efficient strategies for our clients so they can pursue their passions in life. Today, I'm joined by one of my favorite clients in my 30 plus years of practice, Chole Kwon. She is a very successful young professional and an entrepreneur living in the Austin, Texas area. Chole, please tell us a bit about yourself and how you started your real estate journey.
Hi, Justine, and the audience of her podcast. My name is Chloe. I got started, honestly, with just buying my, primary property. When I finished my grad school, I had $500 in my savings account because I spent it all paying for my
Tuition.
grad school. Yes.
That's investment in your education.
That is. Yeah. And, I think I'm very lucky to say that I don't have any student debt. I know that's a lot. A lot of people have that debt that sort of, stops them, hinders them from getting started with their investing journey. Thankfully, I didn't have that. But what I did have to make a decision on when I graduated from my grad school was with $500. I didn't have a car at that time, which you must have a car in Texas, right? And then I had a decision to make whether to buy a house or condo or something else, right? And I was lucky enough to join a women finance group here in Austin, Texas, that basically talked about, anything from credit building to investing to building businesses. But I think what that kind of enabled me to do was looking at what other people were doing that that I didn't know before that was possible, right? So I think that type of having role models or examples of other people who's investing around you in your community that can help you and show you what's possible. I think that was the first step in me taking the
And
step
with the
towards.
$500, you purchased your first home.
Yes, that. So I had $500 in my savings account. I know it's crazy. I'm usually very responsible with my money, but at that point, I knew that I already had a job lined up, and I also had a sign-on bonus. So
Mm-hmm.
that sign-on bonus, and I don't recommend this to other people, but my sign-on bonus, and then I put all the renovation on my credit card because in my calculation, I had a great job lined up that was high paying. I had a less risk of investing in something because I knew that I had income coming in, right? So that was the reason why I sort of flexed my risk muscle and bought my first investment property that also was my primary.
Mm-hmm. Yeah, we call those house hackers, right?
That's right.
Your generation, the smart ones, the financially smart ones, like to be house hackers. I can see that. My son is one too.
Nice. It's the best. Honestly, I recommend this to everybody who's starting out in real estate or not. You could be an experienced person. As long as you don't mind sort of that, discomfort, I should say, of living with someone on the same lot as you,
Mm-hmm.
and you can still keep your privacy, right? Mine is completely separate. I don't see any of my guests anytime, right? But it does help accelerate your investing journey because it basically pays off my mortgage and PITI almost every month,
Yeah,
right?
you live for
Depending on
free,
property tax.
right? And then learn how to
Exactly.
deal with the real estate journey, all the like handyman, the issues with the house, right?
That's right.
Yeah, yeah, yeah. Okay, thank you. So look at you now with the $500. Now I don't know how much you have in your bank, but you have a lot of experience in real estate that I know because I
Mhm.
started doing your tax return back in 2023 for 2022, right? And
Mhm.
that's when you purchased your first investment property. And you are one of those brave souls that really leveraged the STR loophole in those years. Because in 2022, I believe it was still 100% bonus depreciation. So you kind of caught the last train.
That's right.
Yeah,
Yeah.
we're both
And I
here.
actually,
Yeah.
yeah, I actually bought my first house in 2019,
Mhm.
but I didn't start doing the bonus depreciation until I met you,
Oh
right?
yeah, yeah, you're right. Because you don't know what you don't know, right? So that's
That's
why I
right.
say if we don't we don't provide value to clients, we will not be here. So let's first let me be the professor to just very simply explain to my clients what is a short-term rental. Does it mean just put my house on the Airbnb? It's a short-term rental. So we short-term rental definition in the IRS code, there are a couple of things that you have to requirements you have to meet. And Chloe, you can throw me questions because sometimes I talk like an accountant, right? Nobody knows what I'm saying. So stop me there. So short-term rental, the first requirement is the average stay in your place has to be less than 7 days. So how many days you have in a year, right? How many stays you have, the average stay has to be less than 7 days. If you don't meet that criteria, people tell me they have midterm rental, they have a traveling nurse stay there for 3 months or 1 month. So that is not considered a short-term rental. So you cannot use that loophole. And the second thing to use the loophole is very, very important. You have to manage it yourself. It's called material participation. There are 7 ways to meet the material participation rule. I don't want to bore you. You can just talk to your chat GPT and type in 7 ways to qualify for material participation. They're going to all spill out. And we normally advise our clients to use the 2 of them. The best one is you spend 100 hours in this activity and nobody else is spending more time than you. So which means, Chloe, you basically have to manage yourself, right? If you have a property manager, I think they're going to spend more than 100 hours on the property, right? So
Yep.
you did that. And I remember that our first call was about that.
Yeah, definitely. And I think it's a challenge, especially for people who have a W-2, 9 to 5 job.
Mm-hmm.
I have had a job as a data scientist in tech, which sort of enabled me to have a more flexible schedule. And I think that's one of the reasons why I was able to materially participate and take advantage of this short-term loophole.
Mm-hmm.
And also, you want an active income as well so that it can offset.
You're right. You're right. You're right. If you don't have a W-2 income, then there will be another route to go with. It's called the real estate professional status. So what you can do is actually, if you can qualify for the real estate professional, you do not need to use the short-term rental loophole. So this short-term rental loophole is really for people who have very high W-2 income, right? So they can offset their W-2 income. And why you can do that is because when the average stay is less than 7 days, when you materially participate in this activity, this is no longer a passive activity. This will be
Right.
considered almost like you're running a hotel. That is why the IS give you the code, right? So the second way I tell people to, you can, what's the qualify for the material participation is the 500 hours. Then if you can participate in the activity, you can spend 500 hours that year in that activity, then you don't need to prove nobody else is spending more time than you. So how is that possible is if you are doing major renovation and you are acting as a GC, very likely you are going to spend that much time. So you don't have to meet the second criteria. The other way is you have a couple of short-term rentals, right? Then you can group the activity and make it into 500 hours. And each individual property can still be managed by other property managers. So, Chloe, am I clear on the 2 ways to meet the material participation rule?
Yeah, that's very clear. And I actually didn't know that you could still have property managers on other properties, just in collectively, you just need to spend 500 hours a year. I didn't know that. I thought you just have to
So
manage
I
all of
have
that by
clients,
yourself.
yeah, I have clients like have 6 short-term rentals and they are a doctor too on the side. And I don't know how they do it. They're like you.
Crazy.
They're like you. So if you're like that, you have 6, right? So you, as long as you can prove you spend 500 hours in this whole activity, even if each property is managed by a property manager, they are spending more time than you in each property, but it will still suffice. But when you came to me, you only had one. So the first criteria is easier to.
Right.
And also for most of my clients, they don't have 6 short-term rentals because that's a
Right.
lot of work and
That's
a lot
a
of
lot of
capital,
work.
a lot of headaches, right? So
Mm-hmm.
and this is very, very important to understand. The loophole is for high earners. So, and the point is, people also ask me, so why bonus depreciation has anything to do with this? So imagine, we can use your case, Chloe, right? In 2022, you purchased a short-term rental in Florida with a friend, right?
Mm-hmm.
Yeah. And then I remember we were able to bonus depreciate over $100,000 on that property. Is because, let's say,
Right.
I forgot the property value. Do you remember?
It was around 520.
Yeah. So in the $520,000, you also put more renovation money in there, right? So after
Mm-hmm.
the whole renovation, the total basis for that property was what, 800,000?
Yeah, it was like 700 or something.
700,000.
Yeah.
Thank you. You have
Mm-hmm.
better memory. So we did a cost segregation study. The reason we're doing cost segregation study is 700,000. If we take regular depreciation, it's over 39 years, which means
Mm-hmm.
every year you can only take less than $20,000 in depreciation, right? So the
Right.
most loss you can generate is probably just that $20,000. That's not enough. We want bigger losses, right? We
Mm-hmm.
were able to do a cost segregation. So there were, I believe, $200,000 worth of asset in that property is less than 20-year depreciation period. So we were able to write the whole $200,000 off, which, Chloe shared with her friend. So she got $100,000 in her tax return. So that's a
Right.
6-figure deduction on her high W2 income. She was still working as a data scientist,
Mm-hmm.
right?
That's right.
Yeah. So we got mostly oil withholding back that year, right?
Yes.
Yeah, it was a big
Amazing.
Yeah.
Yes, I love this. I love this strategy. I mean, I haven't paid, federal taxes in how many years, right? We actually get refunds back. And that probably says something about, how much federal tax withholding I'm assigning. I should probably lower that. But, also it's good to get a chunk of refund back at the end of the year and not pay the
No,
Uncle
I
Sam
believe you actually used that
legally.
refund to buy the next property in
I did.
Texas.
Yeah, I'm compiling that, all those refunds, so that I can have more capital to buy more.
Yeah, so you bought your second one in Austin, and we did the same thing. And the second year, we did even something more ingenious, I feel like, because we know that you are going to quit your job, right? So you
Mm-hmm.
have some
Yep.
401k portfolio and your income would be lower that year. So what's the
Yep.
point of doing that cost segregation, have a zero income? When you have
Mm-hmm.
zero income, you're really not saving that much tax, right? So what
No.
we did is, because you were leaving your job, so we converted your total portfolio of 401k to a Roth
Mm-hmm.
and still get most of the refund because you have enough depreciation to write off most of the Roth conversion, right? We did that.
Right.
Yeah, it was beautiful. And I mean, you are so financially disciplined too. Now, from 2024 to now, I'm sure your Roth portfolio has gone up, right? And they are tax free.
That's right. It definitely has gone up. Yeah, and it's fun to see because when you don't know that there are certain things that you can do in terms of optimizing your tax, and oftentimes these tax strategies you have to set it up in advance, right? It's not something that you can do post whatever action that you take. So obviously talk to your CPA like Justin, but as well as getting the education on what could be applicable for your situation, right? And I think everybody's circumstances are so different that you really have to talk to the professionals, right? In my case, I didn't even know that I could be converting them into Roth IRA. I thought there was like a limit, right? Because annually they're it's certainly less
You know
than
what? The
401k
contribution
limit,
does
right?
have a limit, Chloe. You're correct. But the
Yes,
rollover,
but
I mean,
not
not rollover,
rollover.
conversion has no limit. Yes.
Right, exactly. Yeah. So, I mean, I think it's great because I was going to quit my job anyway, and if someone else is in this kind of situation, then that they can definitely take advantage of this, but you have to know that you can do this, right?
Yeah,
And
yeah, yeah.
we want to make sure.
Yeah. You have
Yes.
to do it before December 31st. So if you just go to your accountant in April, you're gonna miss a lot of boats. Because
Exactly.
we meet in
Exactly.
April talking about last year. It's already happened.
Right. And
It's
it's
too
too
late.
late.
Yeah, yeah,
Yeah.
yeah. Chloe, I remember you were my subscriber, so we kind of talk each month, right? And I
Yes.
already enjoyed our conversation. Yeah. So I
Me
think this
too.
is, I hope I'm very clear on the short-term rental, what it is. And Chloe made a really good point is don't get hung up on the buzzwords, right? A lot of people call segregation, bonus depreciation, we all just do it. If you do not meet the criteria of the short-term rental loophole, even if you do all the things like the cost segregation, the bonus depreciation, the loss is not going to flow through to reduce your W2 income. Again, it has to be average stay less than 7 days, and you have to materially participate in the event, right? In the activity. So those two are very, very important. So now you heard like, oh, short-term rental is beautiful. So we should all do it, right? I also want Chloe to share with us what are the headaches of short-term rentals. It's not always just the rosy pictures.
That's definitely right. I think short-term rental is beautiful because there's so many flexibilities in terms of exit strategies and things that you can do, and of course the higher revenue that you can garner than traditional rentals or other strategies. But it's certainly not for everyone, I would say. And I think I can share that because, personally, I've experienced like a burnout, right? From managing so many properties with my full time job, with several renovations and development happening at the same time. It just was so much work. But let me break down some of the things that, maybe some of the risks that people can expect when you are thinking about buying a short term rental property or managing a short term rental property. So one of the biggest like risks that I see is regulation risk. So in Austin, Texas, for example, we used to have a limit as to the quota of the number of permits that City of Austin can provide. And they had to go through a series of lawsuits in order for them to sort of get rid of that restrictions, right? So now anybody can buy a property in Austin, Texas, and turn that into a short term rental with a legal permit. But that is something that we see time and time again. People who are buying it, bought properties in Dallas, for example, or Hawaii. There's constant regulation shift, and if you don't run your numbers before you buy it for those edge cases, right? What if this happens? Then can you run it as a long-term rental or midterm rental, right?
Yes, yes. Chloe, I have
So that's
echo. Yeah, I
yes,
definitely echo with you on this one. I have one of my clients purchased a short-term rental in Colorado
yeah,
by is that what's mountain there? The Rocky Mountains, I think.
okay,
And they were getting great rent and everything. And then one day they found that one of their neighbor called the local government saying that they were not supposed to do short-term rental. They didn't even know. They were not from Colorado, right? So they were fined
oh no,
$500 a day. Their property was up for rent on Airbnb. That was a
wow,
huge battle. Yeah. They were making very good
absolutely,
money the first year, but they pretty much have to give it all out to the government, to the local government. So, like Chloe said, you
yeah,
have to check with the local government, even looking at the pending regulations, right? Because they can
exactly.
change. Yeah, very good point.
Exactly.
Mhm.
Yep. The second risk that people have to think about is the the guest management side. So if you are materially participating, that means that you're property managing for this property specifically, and you're spending more time than anybody else, right? So you don't really have like a property manager dedicated for it. If you have a 9 to 5 job, this, maybe not, people might not think about all the things that you have to spend time on. Like, for example, at midnight, I have gotten calls that, guests couldn't check into their property, right? They can't unlock the door. So at that point, you have to go physically to unlock the door at midnight, right? Or unclog toilets or whatever it is, or call maintenance guy, right? You have to deal with that at that point, right? Because Airbnb
It is
algorithm
time sensitive.
penalizes you. Right, exactly. It's time sensitive. The Airbnb business is all about the reviews, right? Your rating and your reviews. So everything is based on that, and your revenue will fluctuate a lot if you get bad reviews, right? Because people are not going to book anymore. So things like that. it's just understand that it's not passive, and even if you have a manager, you still have to manage the managers,
Yes.
right? So I would say it could become semi passive, which is I think what I spent last year and a half turning all of my rentals into a professional management. But that is something that people should think about when they have a 9 to 5 jobs. Maybe they have family and they want to take this on.
Yes, that's also a really, really good point. It's not for the faint-hearted. And when the IS said this is active, it's actually active. So it's not
It's
just a loophole.
exactly. It's very active. It's very, very active.
Yeah.
And yeah, so,
I do
and
have
it's time
people enjoy
sensitive.
that part of it too. That's why everyone's different.
Absolutely. Absolutely.
Yeah.
Other things that you have to think about is things like seasonality. So you might have a pro forma done before you buy this investment property, but you kind of look at it as like annual revenue, right? Of like running numbers. And you have to also think about there are certain seasonalities that most markets inherently possess, right? Maybe, during summer it's doing really great, but during winter it's a slow season, right? But you have like a similar expenses that you could incur, right? So I would just be mindful of the seasonality and how you're doing your performa. So when you're forecasting your future revenue, and usually you'll do that with things like AirDNA or something that could give you a snapshot of like what the market is doing right now, right? And if you're running numbers like this was back in 2022 and you're expecting same type of numbers, then your profit is wildly going to vary, right? So you just have to think about what that looks like in your market now. Is there anything that you can forecast, right? Maybe there's a huge development projects happening that is going to take a lot of demand, or is there some sort of expense hikes that you can foresee? For example, property taxes are very high in Texas, right, or in Austin, and so you have to think about what would that look like to your cash flow, right? So that those kinds of things. Maintenance, there's a much more wear and tear for maintenances because you just have so much more turnovers than
Yeah, yeah,
long-term
yeah.
rental,
Mhm.
right? So those adds up because every time that someone can some dishwasher is not working, lights are not working, anything that's not working, sinks are clogged or whatever it is, every time you have to send out a handyman, right? And that adds up. So and also if you plan to sell it in the future, you also have to think about, okay, the wear and tear is going to be higher. It's going to be cleaner though, which is, I love that. The
Okay, because it
property is
gets
going to be
cleaned every
very
time.
cleaner. That's right.
Yeah.
Yeah, so I love that, but
Mhm.
you're going to have just a lot more wear and tear, so you have to keep that in mind if you're thinking about selling in the future.
Yeah. Thank you so much, Chloe. That's really from a real operator. And by listening to you, I feel like you are running a business.
Absolutely. It's a
Yes.
hospitality business.
Yeah, yeah, it is. So, I mean, Uncle Sam is pretty smart on that. So, I guess from what you say, I would conclude that if you have a very demanding job, this might not be for you. But if your job has flexibility and you really like, to be more active, like someone like Chloe need to have 3 jobs, otherwise she's restless. That will be fitting for you, right? So I always say this: you never do something just because it's a good tax strategy. It
That's right.
has to fit your personal goal and your personal like personalities, your like
Hmm.
your you as a person, that it fits you, and the tax helps you to stretch it further, but not to do it just because it's a tax efficiency
Yes.
strategy.
Yeah.
Yeah.
And I do think that especially when you get started,
Mhm.
managing your own rentals and Airbnbs oftentimes will give you a insight into what is important when you're running rental, properties, right? So
Mhm.
even if I always had a plan for hiring a property manager, I always at least want to do a year and a half or 2 years of like actually actively managing so that I understand like what goes into it, what do guests care about, what could go wrong, and what is the job well done, so that when I hire a property manager, I know what to look for and look out for in their skills and their experiences at providing,
Yeah,
right?
and
So
that is
I think it's a
actually
good experience.
that's actually perfectly coincide with the tax code, right? So only the first year and a half or so you manage yourself and you take the big loss on the paper, and later on you can
Right.
turn over to your property manager, and hopefully it's actually making money for you. Now your depreciation expense is smaller and you actually turning profit, right? That's and then you
Right.
probably have to do the next project to create the loss. That's a never
Right.
ending game.
It is, but I think it's so exciting though, from my point of view, is that because you can optimize your taxes in a lot of different ways, and real estate is amazing for that because, tax code was built, made by people who invest in real estate, right?
Yeah, that's what we used to
And
say. Yeah.
right,
Yeah, the
right.
real
So
estate is
it is.
the most tax efficient investment. Yes.
Absolutely. And so, I think there's many ways that you can invest in real estate, but active investing I found provides the most amount of tax optimization
Yeah.
and,
Yes.
depreciations and all that.
And
So,
don't forget, you are like you are also kind of how do you are developing a portfolio. Like other
right.
people are paying all your mortgages, right? So you're building equity up. So we're talking about 10, 20, 30 years from now, you will have a nice portfolio, right? With great cash flow, and you will be completely financially free.
Yeah, that's the goal.
That's the goal. Okay, we just have a few more minutes, and I would like you to tell us about. So, what is your journey now? I know you've done a lot. You've done short-term rental, house hacking first, and short-term rental. You were also doing development on the side. So now you have so much experience and know-how. What is the next thing on your agenda?
Yeah, so I've done a lot of soul searching into what type of life I want to have and what type of impact I want to have, because I realized that over the years a lot of people have helped me guide and mentor, and I really do think that, investing can be a lonely journey for a lot of people, especially for women and women of color, right? Like such as myself. And so right now I'm, developing, sort of growing my community of other women investors and other real estate investors on how do we grow together better, right? And how do we have an education like, like tax, right? Because without knowing all these knowledge, you can't take the right type of actions, right? So that's one thing, growing community and doing things together. But also, I want to leverage my background as a data scientist. So I do more, apply machine learning and AI side. And so there's been great advancements that has been made in the AI side over literally last 6 months, year. I mean, every
Wow.
day there's something great happening, right? So I want to leverage like my what I'm learning on my job, and then create these like agentic AI systems that powers a wealth management platform. So I want to help people be more confident about investing and managing their money. What are they not thinking of, right? Because, like you said, if you don't know, you don't know.
You're right.
And so,
You're right.
knowing is half the battle. And how do we reduce the barrier of entry and the cost of entry for a lot of people to start investing, right? There's, the economy and the market has been softening. We don't really know. We don't have a crystal ball of what's going to happen in the future. But what we do know is that having more financial knowledge and financial planning done along with tax optimization, we will have to keep doing, right? There's no end to it. This is how we're going to create our financial freedom and future for us and our family and our community, and how do you serve other people and also provide a greater impact to the world. And it
Wow.
sounds really grand, but
No,
there are things that
you
if
are
you
doing what we say is that in the first half, I mean, though you're very young, but most people in the first half of their life, they're going outward to accumulate more stuff. And the second half of life, they go more inwardly to give back to the community, to grow with the community instead of just a loner striving for excellence, right? I think I see that
yeah.
shift in you a little bit very early. That means you're very wise.
Yeah, I don't know, but thank you. Yeah, but I want to be more intentional about how I'm spending my time. Like, where is the best way to spend time and money? And also, I want to make a lot more money, right?
Yeah,
We all want to accumulate our wealth and increase our wealth. So, how do we do that together,
hmm
right?
hmm
Because, when we do together, we can go further
you're
than
right.
when we're
I
doing
agree with
alone,
that. I
right?
agree with that. Thank you, Chloe. Thank you so much. So I think I'm going to summarize real quickly. Basically, I hope everyone walk away knows what's the definition of short-term rental and whether the short-term rental loophole is right for you. I know this is really, really the hottest topic right now. I have a lot of my clients are having meetings with me, whether it's a good strategy with them. So if you haven't scheduled your tax planning, please do. So we will see whether it's gonna actually help you. And Chloe has a lot of, I think you have a lot of it's webinars, or you have a nice
Mm-hmm.
group of women
Yep.
investors together. If anyone want to help Chloe, just let me know. I will connect you with Chloe. Okay.
Please
Thank you
do.
so
Thank you
much,
so
Chloe.
much.
Yeah.
Thank you, Justin.